Welcome to Breaking News to Trading Moves. Today we're looking at a headline that, on the surface, is about just one company. But it really opens up a discussion about how global capital markets work.
Exactly. We're talking about Telefónica, the Spanish telecom giant. They've decided to voluntarily delist their shares from the New York Stock Exchange.
Voluntarily, so they chose to do this.
They did. And it's a calculated move. It's mostly about cost, and it creates an immediate chain reaction of winners and losers. And this can affect investors who don't even hold the stock.
Okay, let's get into the core event then. So, Telefónica, the big Spanish telecom, is pulling its ADSs from the NYSE.
Yep. The ticker is TEF.
And this isn't because they're being bought out or anything like that. This is the company itself choosing to leave a U.S. exchange.
And their reasoning is pretty straightforward. They're pointing to the administrative burden and, the high costs of being listed on a major U.S. stock exchange.
I can imagine. For a foreign company meeting all the SEC rules, the reporting, that's a lot.
It's a huge commitment. Think about things like Sarbanes-Oxley, quarterly reports in English, translating your accounting. It adds up. It's a lot of money and a lot of internal resources.
So if they're leaving the NYSE, where are they going? They're not just disappearing from the U.S. market completely, are they?
No, not at all. They're just, let's say, downgrading their presence. For anyone holding the ADSs now, Telefónica is offering a way to swap them for ordinary shares listed in Spain.
So you can trade on their home market in Madrid.
Exactly. But for U.S. investors who want to stick around, the plan is to move to something called a Level 1 ADR structure.
Okay, wait. Let's slow down on that because that's a technical point, but it seems really important. What's the practical difference between what they had and this new Level 1 structure?
That is the key distinction. What they had on the NYSE is a Level 3 ADR. Think of it as the platinum license. It requires full SEC registration, full U.S. GAAP financial reconciliation.
Meaning they have to make their Spanish accounting look like U.S. accounting.
Precisely. And all the quarterly reporting and internal controls that any American company has to do, it's the most expensive, most demanding option.
So if that's Level 3, what are they getting away with by moving to Level 1?
Level 1 is, well, it's the bare minimum. It basically just allows U.S. investors to trade the stock over the counter, or OTC.
Okay.
It lets U.S. investors hold the stock in U.S. dollars, but it avoids almost all of that expensive, heavy SEC reporting. They get to keep a trading presence, but they shed all that regulatory weight. It's a huge cost saving.
That really clarifies the cost argument. So what's the timeline here for investors holding TEF?
It's pretty quick. The delisting should be effective just 10 days after they file the paperwork, which is a Form 25. Once that form is filed, the clock starts ticking.
Right. Now let's talk about why this matters to someone who has never even heard of Telefónica. You mentioned this one action sets off other reactions in the market.
That's right. The first thing that happens is a reduction in liquidity. Telefónica is moving from a big central market like the NYSE to the much more fragmented OTC market.
Which is less visible.
Much less. And when that happens, trading volumes tend to fall, and the trading spreads can get wider.
Meaning the difference between the buy and sell price gets bigger?
Yes, so it becomes a bit harder and more expensive to trade the stock.
Yeah.
It just makes it a less attractive vehicle for a lot of people.
And what about these forced flows you mentioned? How does this affect big money managers?
This is all about rule books. A lot of large funds, like mutual funds or index funds, have very strict mandates that say they can only hold securities listed on a major exchange.
Ah, so they are not allowed to hold OTC stocks.
Not at all. So when TEF moves from that Level 3 NYSE listing to a Level 1 OTC structure, that fund manager is suddenly holding something that breaks their own rules.
And they have to sell. It doesn't matter if they think the company is a great investment.
Exactly. Their compliance department will force them to sell. This kind of mechanical selling puts pressure on the stock price right around the delisting date.
This brings up a bigger question then. Is this just a one-off thing? Or could this be a new trend for other foreign companies listed in the U.S.?
It could definitely set a precedent. If other big international companies start thinking the benefit of U.S. liquidity isn't worth the cost of U.S. compliance, well, they might follow suit.
So it's like they're voting with their feet, saying the NYSE badge isn't worth the price anymore.
In a way, yes. It's a slow headwind for the U.S. exchanges and for all the banks that make money on those cross-border listings.
Okay, so we have the main event mapped out. But in financial markets, one company's problem is often another's opportunity. Let's talk about the winners. Who benefits from this kind of move?
Let's start with the plumbing of this system. Category A custody and depository services.
The back office guys.
The back office guys. The rationale is simple. Paperwork equals profit for them. This delisting triggers a ton of administrative work processing, conversions, moving shares, setting up the new level 1 ADR. All of that generates fees.
So even if the NYSE loses a listing fee, these servicing banks are busy.
Very busy. We're looking at the big custody banks here. Companies like Bank of New York Mellon, ticker BK, and State Street, ticker STT, they handle the back end, and they get paid for every transaction.
Okay, that makes sense. Moving to Category B U.S. Telecom rotation beneficiaries, this connects back to those forced flows.
It's a direct result. Those big U.S. funds that were forced to sell Telefónica, they still need to be invested in large telecom stocks. That's their mandate.
They can't just sit on cash.
Right. They have to redeploy that capital into something similar that meets their rules.
So they sell the Spanish stock and buy the big American ones.
The big liquid compliant U.S. names. You're looking at AT&T, that's ticker T, Verizon, ticker VZ, and T-Mobile US, which is TMUS. They're the most logical places for that money to go.
And what about the last category of winners? SEC reporting and compliance automation. This seems like a learn from their pain kind of play.
It's the preventative trade. Telefónica was very clear. The administrative burden was a key factor. So other foreign companies who want to stay listed in the U.S. are now probably thinking about how to lower their own compliance costs.
They'll look to technology.
Exactly. They'll invest more in software that can automate their SEC reporting, their internal controls, all of that. It makes them more efficient.
And who provides those tools?
You're looking at companies like Workiva, ticker WK. They specialize in compliance and reporting software. And another is Blackline, ticker BL, which focuses on accounting automation. They can see more business from firms trying to avoid Telefónica's situation.
Okay, we've covered the winners. Now let's look at the other side of the coin. Who gets hurt by this decision?
Well, the most obvious group is Category A, the exchange operators themselves.
The NYSE, in this case?
Yes, but it's a broader issue. If this becomes a trend, it puts pressure on their listing fee revenue. And maybe more importantly, it chips away at the reputation of U.S. exchanges as the default place for global companies to list.
So it affects the whole U.S. listing franchise, as you call it.
It does. We're talking about Intercontinental Exchange, the owner of the NYSE, ticker ICE, but also NASDAQ, ticker NDAQ, and Cboe Global Markets, ticker CBOE. Fewer global listings is a problem for all of them.
And that leads to Category B, the big investment banks that handle cross-border deals.
Right. This is about their future pipeline of business. Getting a big foreign company listed on the NYSE is a huge payday for an investment bank. There are advisory fees, underwriting fees.
A whole ecosystem of fees.
And if foreign companies are less ambitious about listing here, that pipeline of big-ticket international IPOs and offerings could shrink over time.
Which would affect the major players in that space.
Correct. We're talking about firms like Goldman Sachs, ticker GS, and Morgan Stanley, ticker MS. They've traditionally dominated that high-fee cross-border business.
Okay, and the final category of losers brings us back to the stocks themselves. Exchange-listed ADRs with mandate risk. And I guess we start with Telefónica.
Yes. Telefónica, TEF, is the most immediate loser. It's facing that selling pressure and reduced liquidity we already talked about. But the bigger lesson here is for its peers.
Other big European telecoms.
Exactly. Telefónica's move is a reminder that a U.S. listing is optional. It can be revoked if the costs start to outweigh the benefits. So if you're an investor in another large foreign telecom ADR, you suddenly have a new risk to consider.
You have to ask, could my company be next?
You do. This puts a spotlight on similar ADRs. Think about companies like Vodafone, ticker VOD, or Orange, ticker ORAN. Investors are now looking at them and wondering if they face the same delisting rationale. If they were to delist, their investors would face the same issues.
It seems like this one company's decision really does touch many parts of the financial system. As we wrap up, what are the key things we should be watching for in the near term?
I'd say there are three things. First, the actual filing date of that Form 25. That officially starts the 10-day countdown.
Okay, what's number two?
Second, you want to watch for the official company guidance on the mechanics of the ADR conversion. If you're a shareholder, you need to know exactly how to swap your ADSs for the shares in Spain.
And the third thing?
The third is to just monitor what other foreign companies are saying over the next year. Do any of them start talking about cost-saving evaluations in their filings? That will tell us if this is an isolated case or the start of something bigger.
So when you put it all together, what you should really be considering is the global math of the capital markets. Is the rising cost of U.S. compliance starting to outweigh the benefit of U.S. liquidity for these big international companies? That's really the question Telefonica has put on the table. This is not financial advice or buy or sell recommendations. This is purely the opinion of the author.